Hi, my name is Mark Walker. I'm the co-founder of the Fintech Power 50, and we're here today at Innovate Finance Global Summit, and I have the pleasure of speaking with Leda, one of our Fintech Power 50 influencers. How are you doing today?
I'm great, so good to be here with you.
Very good to see you as well. So the first thing I want to talk about, obviously back in the real life events, how are you feeling about that? You know, is it the first ones? How many speaking sessions have you done so far?
It's not the very first one, but I would say you definitely see the numbers of attendees picking up. We are such a close-knit community, and you realize how much you've missed it when you're at an event like this, and there's like a hug a second, which is absolutely lovely. It's nice to see so many people together again. It's really nice.
It really is. Unfortunately, it meant that I couldn't have any lunch because I was constantly getting stopped and talked to.
Same, absolutely.
But anyway, so let's talk a little bit about fintech for a change. So there's been an awful lot of as a service things coming along, banking as a service, various other things. What's your sort of idea of what the opportunity in those sort of as a service things are at the moment and going forward?
It's a good question, and I'll start with the negative so I can finish on a high. I think for a few years we saw a lot of thing as a service as the industry was sort of trying to work out what the art of the possible is, and some of them didn't make a lot of sense. Some of them were either not extensible enough, scalable enough, or didn't actually represent a different way of doing business. But they were fundamentally the same, trying to sort of ride the wave of the zeitgeist. Fundamentally, as a service is an engagement, delivery, and monetization relationship. So our platform is a SaaS model. What does that mean? If I say to a client 10x is a SaaS model, what they take away from it is how it's designed, architected, and hosted, how the sort of division of responsibilities falls, and how little, frankly, they have to do to be able to leverage this platform, and how pricing and costing works. How do I get billed? So the idea of as a service communicates, now that we've matured quite a lot of what the engagement model feels like. How much do I need to do? There's less heavy lifting for the customer if you're a SaaS business and all the rest of it. So now that we've gotten to this place where we genuinely understand what as a service means in terms of the division of responsibilities and the commercial relationship with your customers, it's beginning to be much more interesting when people talk about banking as a service, where banks genuinely understand where they fit into that. And obviously, in the interest of full disclosure, we're working very closely with Westpac. We're part of their banking as a service offering as one of their partners, and I'm super excited about that, because exactly it shows you a A-lister, a big player going, I understand how this connected economy works, and I understand how I want to play my cards, and here am I using my license to genuinely provide a banking as a service platform to third parties.
Okay, so I can kind of see how that works. It's basically become part of our language to communicate that it's a cloud native application, easily accessible, easily implemented, and that type of thing. So sort of moving on from that to some more keywords and some things, embedded finance, which is what everyone's been talking about at the moment. Give us your views on that. I hear you have some strong views on it.
I do have some strong views, particularly because, as you say, all of a sudden everyone is talking about it, and it's big and exciting. And I was asked earlier today about what's next, and it's like, what this has only just begun. I think what you touched on earlier it is key here. There are a few concepts, a few instruments, a few technologies that needed to come of age for embedded finance to be possible. We all need to understand what as a service means, but we also need to have the capabilities that permit it. Cloud infrastructure, API first infrastructures, data governance, messaging standardization, all of these components that have been maturing for the last 10 years, starting with regulatory drivers and market drivers. There have been components around open banking, open finance, and a whole host of pieces that come together to enable us to truly explore business models that would not be possible without open banking, but are now genuinely pushing the boundaries of creativity. Could be talk about embedded finance without an API first connected economy? No. Is it inevitable? Also no. So the idea of absorbing financial activity, be it transaction, access to financial instruments like credit or lending, embedded situational insurance, all of those things that we consume as financial services being embedded into the act of living is new because it has taken us all this time to build the infrastructure we needed, but also to develop our sea legs in terms of imagining how we could put things together and still make money in the process and still deliver a meaningful service. So I think embedded finance seems to have emerged fully formed, but every single one of the components that make it possible have been in the making for anything up to a decade in some cases. It's a very exciting time because all of these things are now possible.
Cool. Okay, so I think that's interesting, obviously saying that, you know, all of the work that we've been doing for the last 10, 15 years has all been individually performing individual things to work towards an embedded finance model. What do you think the key challenges are now in actually bringing them all together and making them a coherent working unit?
It is a very good question, and I would say there are three different sets of challenges. One is a potential attention deficit disorder in our industry. We've talked about fast-paced innovation. People are really driving towards the next thing. And some of the pieces we're talking about now are actually quite complex. They need depth and they need width, they need a broader set of actors. So it can't be a 6-month program of work. So I think adjusting our depth of horizon, our expectations, and realizing that there will be complexity and these will not be innovation projects that people will churn out every few months is important. We need to stay with this. This is a new way of understanding our economics, right? The second piece is that it changes the way banks and financial services institutions play. There is a narrow sort of vertical play where you can offer services on top of as many platforms as you like. The cost of curiosity is smaller, the cost of doing business is smaller, but potentially the ownership of the value chain is more limited versus people going, I want to be the platform, and your commitment financially and in terms of timescale is bigger, but your reach would be bigger. You have to make some decisions. Are you going to try and play in both? Are you going to go for one, and are you going to fully commit to it? One of the interesting things we're seeing now is that a lot of the banks were sort of waiting to participate in this space, but almost universally expecting to be the platform. And as you see some of the first movers, you also see the question being asked, is there space for everybody? And the answer is there is space for everybody, but not necessarily in the horizontal space. The third set of challenges, which is again completely unrelated, is nothing of this thing is inevitable. And I was on a panel earlier with Lord Holmes who said there are all these things that are possible, but we as an industry, as consumers, as practitioners, need to make them so. The fact that something is possible doesn't mean that it will play out. So there's an incredible opportunity for amazingly user-centric, cheaper, richer in sort of optionality options for the consumer. It's possible, but it will only happen if we do it. There's an opportunity for greater internationalism as these connected experiences can defy borders if the regulators are aligned. Again, that won't happen. Nothing is inevitable. We have to make it happen. And there is a lot of complexity in wrapping your head around the economic models, putting muscle behind pursuing a different way of doing money, building the connected components that are needed for you to deliver an embedded payment solution. It is very easy to not constantly go back to that art of the possible, to know that none of this is inevitable and needs real intent behind it is an exciting time. We just need to stay with it and not lose focus and start talking about the metaverse.
It's really interesting because it's quite easy sometimes to get wrapped up in disruptive tech, yes, as we call it, and actually lose the view of actually we're doing this to create solutions and yes, solutions that consumers want and people want to use and that are helpful. Right. So I picked up quite a bit from the last sort of challenge one, but then the other two seemed quite aligned to the idea of collaboration. And do you think we're now moving into a phase of growth where actually now we're all talking about how can we all work closer together? How can we not start reinventing brand new innovative things? Can we just actually start making the things that are innovative work correctly?
I wish I could say yes to that. I wish I could say yes to that. The challenge we've had over the last few years is that collaboration has been largely a way of big institutions trying to find a competitive edge. So big entity, small entity collaboration in sort of exploring innovative ideas has been a way of trying to accelerate innovation. And hats off to you, I did it when I was on the inside of the bank, it works. This is a different type of collaboration. This is a commercial relationship that requires an understanding of interdependence that goes beyond not everything we've known before, because we've had interdependence in the industry, but the whole thing about embedded finance, if you think about the pieces that you need to make it work, you have all the infrastructure pieces and you have all the various participants. So when we think about collaboration, we need to take it to the next level of understanding the degree to which we become interdependent with partners and vendors with whom we have a commercial relationship, but we also have a very, very, very close. Our existence is sort of bound to each other's fortunes in a way that is inevitable when you say it out loud, but new. So when we talk about collaboration, it's not a sort of soft and cuddly type of collaboration. We succeeded in the soft and cuddly, let's think together, and what we have created is a connected economy. What is a connected economy? It's an economy of fundamental and profound interdependence, which means that you and your partners will need to stay collaborative throughout the life cycle of what you're doing. You remain interdependent. I personally find it really, really inspiring. But it takes a different mindset and a different way of working.
Okay, so it's kind of moving from a sort of a theoretical phase of collaboration into an actual practical phase of collaboration.
Exactly, and moving away from that ideation and lab-based collaboration where we all get participation awards and it's great to actually, that bit worked, and now we're launching something that requires 20, 15, 30, 50, hundreds, it doesn't matter how many, different players to succeed together. Which means that collaboration isn't a thing we do sometimes, it becomes a thing we do consistently all the time, because the very idea of embedded finance means that one thing is embedded into another. But actually, if you start unpacking it, it's not two things, it's actually probably about 50 different players at different stages of the journey or different depths of the stack. All of those need to continuously work seamlessly together and evolve together for this to continue working for the consumer. That is collaboration, but it's collaboration married to interdependence in a way that we need to embrace, because that's the whole thing that we've built now.
It's kind of interesting, I guess, because if you look way back when the traditional banking sector was formed, they were full service providers, effectively, for want of a better word, 100%. Where they were offering everything. We went through a period of breaking that all down and making it individual, and now we're saying that we're actually going to be bringing them together. And do you think, what are your thoughts on the positive side of it, and will we build it back better, or do you think there's still some possibilities that we could build back and not completely solve all the problems?
I mean, sadly, there's always a possibility that we could get it wrong, and I will go back to Lord Holmes' point, nothing is inevitable here. This will not work out well all on its own while we're out doing something else. So it needs that focus and attention and deliberate intent. But the possibility to build it better is absolutely there. I think one of the very interesting pieces around that interdependence that I was talking about, one, realizing that no one is an island, no one is a fortress. So that interdependence being accepted as part of the game means that relationships between different players are different, the way the regulator looks at the whole thing is different. But the time when we're all unitary blobs in the industry, monoliths, not blobs, was also the time that the banks felt that they had to provide every service, design every experience, own every component and build every bit of the technology. Whereas now the realization that you can be much more creative and much more aligned with the communities you serve by limiting what you do and partnering or buying the rest, and allowing yourself to go best in class. That would be you, and you will provide my core banking, and best in class, and that will be you for onboarding, and I as a bank will focus on serving the communities I serve, and it could be transaction banking and trade finance, or it could be retail, it doesn't matter. So I do think that it has all the ingredients to come back much better, both in terms of the art of the possible and in terms of the benefit that goes back to the consumer. But it needs that intentional focus. The fact that it's possible doesn't mean that it will happen without everyone staying focused and deliberate on it.
I guess for my final question is, like, who do you think owns responsibility for that, building it back better? Where are the main drivers of responsibility, and who should control that sort of thing?
It's a very good question. I think it's all of us, actually. Everyone who participates in this industry right now, I believe, has a duty of care towards the communities and the community. So if we're all here pursuing the art of the possible, and we are in a regulatory environment that for the first time is really driven by what is desirable and what is possible, and not just checklists. The conversation has been reset and uplifted. The regulators are increasingly shifting their gaze, not just from the fully regulated entities, but also to material providers, saying, if you're all coming together to create this service, are we all playing by the same rules? And the answer is, it is incumbent upon all of us to actually make sure that we do. The responsibility to educate the consumers, the responsibility to continuously do better. I mean, obviously we feel very strongly about that, and that's kind of our name, right? 10x better, because what's the point of having all of this at your disposal if you only do a little better? But that, again, is not inevitable. So the question that you just asked should almost be a mantra. When we get together at events like this, it's, are we living up to that responsibility as a community, and what should we do more of? Are we constantly educating each other on what is possible? Are we educating the consumers? Are we continuously pushing the boundary of the conversation with policymakers? And what I was talking about earlier about the potential internationalism in this is the next frontier. We haven't really gotten our teeth into that. Should we? What are the downsides? What are the upsides? Where is the complexity? This is exactly the dialogue we should be having. And although the abstract experimental innovation is absolutely something that should be happening still, I think we've got this coming of age of the industry where there's too much going on to fit it all on one agenda, one room, and that's great. It means we've succeeded, but we should allow for these things to expand and take up more space, and not try to cram everything in one set of conversations, because that inevitability will come back to bite us.
It's kind of how I feel with every time I sit down and interview you, is that there's so much more conversation to have and so much more to talk about. We're going to have to leave it there, I'm afraid, but thank you so much for talking to us. We very much appreciate it.
Thank you for having me.
Thank you.